Hello, Paul Gerard from Price Accounting Services, and welcome to this video which covers 2023's tax year and onwards working from home deductions. Now this is probably one of the most important videos to watch if you have working from home deductions, because everything has changed this year and you need to know the key rules, requirements, record keeping, everything that is associated with claiming working from home deductions. So let's start with a quick refresh on where we were in prior years. In the 2020 year, when the pandemic commenced, Scott Morrison announced a simplified method for working from home deductions to be claimed. So essentially there were three methods. You could use the 80 cents method, 80 cents per hour, and it was all inclusive. It covered internet, stationery, the lot. Alternatively, you could use a 52-cent method, which covered your energy consumption, your power, and running a laptop, printer, and all those things. Plus, it covered, it allowed you to then claim a proportion of the additional running costs relating to things like the internet, for example. Then there was the actual expenses method, which has always been available to taxpayers who are working from home, and the three methods were able to be used by somebody not in business but just working from home as, say, an employee. This has all changed in the 2023 year. The ATO has come out with a modified view which completely throws all that out and starts with two methods. So what I thought we should do is walk through the requirements for each, what it covers, what it doesn't cover, and we've got some guidance in our tax pack on how you can present that information to us to assist calculations and so forth. Okay? So, important to note before we get going, this does not cover a place of business. A place of business might be completely different, and the actual expenses method might actually be more favourable. So if you have questions in that regard, do contact us. We're happy to guide you on that. Okay, so in our 2023 checklist, we've revised it completely to cater for all these changes, okay? But let's look really at the detail of what these changes are, okay? So the two methods available, we have option one, which is a revised hourly rate basis. Now, the revised rate is 67 cents per hour. And we'll have a look at this in greater detail. And option two is the actual expenses method, and we'll also address that and have a look in some of the details. So let's start with what are the conditions that apply to working from home deductions? Well, simply, you must have worked from home, and the home must have been used as a place where you conduct your work. Okay? And B, the taxpayer must incur additional expenses in relation to the operation of their home-based office, for example. Now, under the old rules, pre-2020, a taxpayer could only claim working from home deductions where they had a designated area, a study set aside for that work. 2020 pandemic came in, the modified and simplified rules, particularly under the 80-cent method, said each taxpayer can claim, even if they share a workspace, and it doesn't need to be dedicated. So by that I mean kitchen table. You could have mum and dad both working from the same table. It's not a designated workplace, and the deductions could have been claimed. The revised methods for 2023 don't require that direct available dedicated space, okay? So it's a simplified method that's been probably broadened a little bit further. So let's look at the example of Ben and his son John. John may be unable to claim the working from home hourly rate because his son John has not incurred any expenses for the running costs for the home. So it's an important consideration that if you have, say, mum, dad and eldest daughter, and you're all working from home, there may be some limits on what the daughter can claim. Mum and dad are fine. It doesn't matter who paid the bill as such, but it's important that mum and dad, as I guess a couple, spouses, have jointly incurred costs, whether the bill's in one name or the other. Okay, so we can ignore that one. But John may be able to claim a proportion or claim his hourly rates, etc. If John indirectly incurs expenditure. Now, we probably aren't talking about board here as much as if he contributes to a share of the running costs of the home. So if he paid a token amount of board, that may be sceptical. But if he paid a regular and reliable amount for example, to cover food and laundry and things like that, then it's possible he can claim. Okay. There's a new additional requirement under these new methods, and this is going to be the most important thing you consider and ensure you've dealt with. Okay, this is a substantiation requirement. Now, in our 2023 tax pack under the optional tools folder, you will find some additional information and resources to guide you. We have a software copy and a PDF copy of a record keeping tool. Now, why is that important? Let's break the 2023 tax year into two periods. So from July to end of February, the ATO hadn't issued their new rules. This meant you could use a reasonable record based on diaries and other things to determine your working from home hours. Pretty straightforward. Everyone should be familiar with that. And you'd be familiar with our past practice of asking how many days a week did you work from home, how many hours, and so forth. And then maybe adjusting that for public holidays, leave, and things like that. With the revised views from the ATO, there's a shift. In our 2023 tax pack, in that folder is an additional record keeping tool because the ATO has an expectation, not an option, it's an expectation that taxpayers maintain a record of every single day, hour that they work from home, and that this record be continually maintained. And this continues into the 2024 year as well, okay? So please print it and use it, sit it beside your desk if you need to, and keep that record. In our tax checklist, we do ask the question, do you have it? If you don't, it's going to make claiming from the period of March through to June of 2023 somewhat problematic, because we will be in the position, and you will be as a taxpayer, in the position of not being compliant with substantiation rules. So please ensure you follow that and keep a continual record of actual days and hours that you work. So for example, if you work a few hours in the morning and then you've got to go out to see a client, and you're travelling and you've got car expenses, it's only natural that the record should only reflect the actual number of hours, the couple of hours you worked in the home, and it doesn't then include the whole day. And there may be then travel deductions and so forth. Okay? And maybe you could even keep a track of the Ks that you're travelling for each of those days on that same record if you wanted to. Okay, so that's the dealing with the split of the two tax periods during the one tax year. Complicated, hey? Okay, so you can keep the diary record, etc. for the first part of the year. From March onwards, you've got to keep an actual record of hours. Okay. The 67 cents per hour basis then is actually fairly straightforward. So we take the total number of working hours that you worked within the home, at home, and you claim 67 cents per hour. That 67 cents per hour covers energy. So covers all your gas, electricity and all those sort of things. We don't consider water to be an additional working from home cost, so ignore that. And you certainly cannot claim a proportion of rental ownership costs, such as mortgage interest, etc., unless your home is a place of business, okay? That's a very important distinction. And then I'll give the caution that even when home is a place of business, if it's operated through a company, if it's operated through a trust, then no deductions will be available, okay? Unless we advise otherwise, because the entity doesn't incur any of those operating costs, only the employee does. So it might be necessary to consider what can the employee or the working person claim in relation to that. So come back to us for advice if that applies to you. The 67 cents per hour covers the energy, as I said, and then it does not include any further costs outside of that, okay? So that covers your internet, it covers your printing and stationery, it covers all those bits and pieces that you would have otherwise claimed under the 52-cent method before, not allowed any longer. So that is somewhat complicated. It is simpler, definitely simpler to claim 67 cents per hour and nothing more, okay? There is an exception to that, and that is depreciation. Depreciation of the workplace, for example, a desk, not available because that's included within the 67 cents. But if you have a specific asset, laptop, printer, things like that, that are used in that working from home, the depreciation is additional and is allowed, okay? And our tax checklist caters for that information. So if you acquired, for example, a new phone, a printer, a computer, etc., we do ask for the installed cost and the date to assist us to work that out. And that'll be additional to the 67 cents, okay? Where the asset has a mixed use, then the proportion that relates to working from home or working at all needs to be adjusted. So let's use an example that Peter operates and works from home. He then buys a specific asset that relates to performing his work. Let's say it's a laptop, okay? And he uses the laptop for approximately 50% work and 50% private for paying bills, checking out holidays, trawling the internet, etc. That's then adjusted so that for example, the $1,000 cost, half of it is private, $500 is then depreciated, okay? And there's various methods we can use to accelerate that, and we look at the effective life of the asset and so forth. Leave that to us. So you'll notice in the tax checklist, we do ask for the business-related proportion of the use. And in some cases, it might be 100%. For example, if a surveyor needs some certain tools and gear and he takes it, he uses it, well, let's say a certain calculator, and he's only using that for work, could be 100%, no problem with that, okay? But otherwise, please adjust for private use. So in our tax pack, check out the optional folder. It's got not only those record-keeping tools that might assist you, we've also included a printed summary which comes from NTAA, National Tax and Accountants Association. It gives an example of the claiming home office running expenses in that. Good example, nice and simple. Find that's useful to sometimes give people guidance on how it relates to them, okay? So before you hit the information and start completing your tax checklist, have a look at that. It's well worth it, okay? And that gives the example of Fred, an employee who works a couple of days from home, and talks about him buying a laptop and so forth, and what receipts and invoices and what records he might need to have. Nice and simple, okay? And it probably covers 60, 70%, if not more, of most working from home employee type deductions, okay? The only thing I need to really now address is the actual expenses method. Now, this is really hard now. The actual expenses method, obviously, for example, if we just think of your electricity bill, it covers all of your operating costs of your home for all of the year, and you cannot just take, for example, 20% of it and say that relates to work. No, that's not how it works. Remember, earlier I said it relates to the additional running expenses. Okay? So if you're going to go down the path of actual expenses, you certainly can't include occupancy and ownership costs like rent and mortgage, etc. But you can include the additional running costs for the home. Now, how do you calculate that? Now, if you, for example, have lighting in that workspace, you would probably need to use some sort of calculator to work out for the number of hours, what is the operating cost of a light bulb and a printer and a laptop. That's the sort of detail the ATO are going to expect. It is complicated, it's difficult, and unless you're doing significant work from home, and or you might be in a situation where you have your 67-cent basis as a comparison, but then you've got all these additional, let's say 80% of your internet relates to all the working online, etc. You've got to weigh up which one method is better. You cannot combine or blend at any point in the year the two methods. So it's either 67 cents or it's actual expenses adjusted for all private use, adjusted for all things, so it isolates only the additional running expenses. And you'll see when you start to really think about that how complicated and difficult it may be unless you're working very significant hours from home as a place where, for example, it might even be a place of business. So if you've got any questions in that respect, do come back to us. Now, I thought I'd end this with some frequently asked questions. So these frequently asked questions, I'm going to walk through some examples. They should hopefully cover the most common questions you might expect to have. So, first question. You have more than one person working in the working from home environment. Can we both claim it? Absolutely. Yes, you can. Under the actual expenses method, you would need to have that same shared cost perhaps, so it's going to be split. You can't both duplicate and replicate, so any calculation needs to consider not just the private use but all other use as well. So you can't just say, well, each of us are going to claim, for example, the same $1,000 of costs. It would be $500 each, okay, if you're both working the same number of hours, etc. The benefit of the modified view is that both are allowed to claim, both couples, or for example in a share house it could be all three people are able to claim those same costs, provided each contribute to the running costs of the house. Okay. Another common question, I didn't keep any records after the 1st of March, it's a bit onerous, I didn't keep that running record, what can I claim? Well, you might be able to go back and reconstruct and prepare based on your records that actual record. I don't think there's any mischief intended if you do that, if you've suddenly become aware of this new requirement, but you do have to have that continuous record. So go back to our optional tools folder, print that out, or use the Excel version, and reconstruct your hours and keep that daily record, okay? And that's for each taxpayer, of course. One common question I'm expecting is some people are going to say, I had a different job, changed jobs or changed employers. Can I use a mix of one method for one employer and one method for another period of time, etc.? The answer is no. For the whole of the year, one method, okay? You might need to separately show how you calculated your working from home hours for each employer and make sure you keep a record of that, so watch out for that one. What type of issues make actual expenses complex? I think I've covered that in the earlier part of the video. Just the need to calculate and show the additional running costs of that workplace area and to adjust it for all other private use and also all other users, that's what makes it very complicated. For example, how much does it cost to operate a laptop for 40 hours? I don't know. I can look up some online tools and resources, but they're probably only going to show the current rate for energy pricing, not the rate that applied back in, let's say, March to June. Because we know that energy prices as of July the 1st, 2023 are increasing by, say, 20%. So perhaps you've got to adjust for that. They're the things that are going to make it very complicated. On top of that, you also must have all receipts, all proof of those costs and how you've adjusted it. So if you're intending to use the actual expenses method, you can expect we're going to ask more questions because we have a responsibility as tax agents to ensure that a taxpayer doesn't make a reckless claim. We do allow and facilitate the ability to compare two methods in our tax checklist. So have a look at that, but you will find it's not necessarily going to give you a better outcome to jump into the actual expenses method. Like I said earlier, you can't just turn around and say, well, my home office is 15% of the house, therefore 15% of costs. That is not how it works, okay? Because it is time-based, it's all use-based. For example, kids come home from school and turn everything on, computers and TVs, and then you've got air conditioning, and it's all different. So it comes back to that additional running expenses, okay? I think we've covered it earlier, but I'm going to reiterate another frequently asked question is, so how does this affect my depreciation? For example, I have a split system aircon that I had installed in my home office. Well, I got bad news there. It's part of the building, so now it's covered by the 67 cent basis, and it is not an additional depreciation deduction available because it's not an asset in use for work related purposes. It's part of your building, so not eligible. But I think we can compare that to, say, an air purifier that is freestanding and portable and it's used in the workplace. That may actually be a work-related depreciation deduction. So it's quite complex in that respect, but if you list an asset that we have concerns with, we may come back to you and discuss that with you. Any past assets will continue to depreciate and consider in any calculations, so leave that with us. So I think you'll also find that there are certain assets which are directly related to work from home. A laptop, for example, adjusted for private use. So that is allowed under the 67 cent or the actual expenses method, so you're in safe hands there. Okay. So I think that probably brings us to a close with this slightly complex and slightly confusing new method for claiming working from home deductions. If you've got any questions, do come back to us, and we're happy to discuss your personal circumstances, how they apply to you when you're working from home. Okay, and just also remember, if you're claiming the 67 cent method, you still have to adjust for periods of annual leave, sick leave, etc. So if we take a typical 52-week year, there are 2 weeks of public holidays, there might be a couple of weeks of annual leave that you've taken, and then there's maybe you're off sick for a week, okay? Or COVID or something. So by the time you've adjusted maybe 4 weeks annual leave, 2 weeks of public holidays in a week, you've now reducing your number of weeks for which you then have to consider how many hours in each of those weeks that I did actually work, and you need those substantiation records to be able to determine that. So I hope that's helped, and I hope if you've got any questions, just hit the phone or send us an email happy to get back to you and give you some guidance. So I hope that's been helpful. Thanks very much for watching. Bye.